Good morning, YouTube. Louie here with the Bullion News of the Week. Let's get going. It has been a crazy week, and let's review everything that has happened. All right, we're going to start off with gold price, and here is the chart of gold for the week. We had a low of about 29.70 as a closing price, and we are currently at 3,237. In the silver market, we had a low of 29.31 closing price, and we ended the week at 32.30. Which metal do you think did better for the week? If you said gold, you'd be incorrect. Gold up about 9% for the week, silver up 10%. Yeah, how about that? All right, moving on to the futures price of silver, 32.19, whereas the spot price is 32.30, so that's actually backwardization for the May contract, and that means that out a couple months, the traders think that silver will be right about where it is now. And I don't know how much stock you can put in that, but there is usually a higher spread in the futures market, 50 cents or so over the spot market. So it is, I think we're seeing the volatility here affect markets. All right, and in the 10-year yield, well, this has been the story of the week. There's so much to say about this, but nothing that's really known for sure. But the 10-year has gone from a low of about 4.13 to nearly 4.5 right now. Now, of course, that's happening because there is a liquidation of bonds, and some people surmising that that is China, perhaps Canada, other foreign countries selling their bonds, selling their dollars. I thought Uneducated Economist had a very good video, a day or two ago, talking about what happens when trade with China ceases, right? Right now we basically have an embargo on Chinese goods with some exceptions applied recently. But China has quite a bit of debt, and you know what that debt is priced in? That debt is priced in US dollars. Actually, they have more debt in US dollars, over $1 trillion owed to other countries, than they have in US treasuries, somewhere between 600 and 800 billion. So if you have to pay your debts and you're not getting money from the US anymore, you'd be selling bonds. All right, well, that goes along with the tariff story, and I can't say much more about that, except that people are very worried that the spike in the 10-year bond being so quick is undoing some hedge funds. And they call that the carry trade, with mega leverage on very small moves. When the moves are big, the hedge funds go kaput. So this could cause action from the Federal Reserve. It could create immediate action from the Federal Reserve to create a new bank term lending program or hedge fund lending program, or who knows what they'll come up with. But I do believe that whoever they are, do not want to let these rates spike any higher. And I think we're going to see some intervention. The open Sunday night, the pre-market Sunday night tonight will be very, very interesting. Okay, moving on to the gold-silver ratio. Now, I've given you what is this, a 5-year chart? Here's a 5-year chart of the GSR, and I will have the privilege of interviewing Carl Yashenka, the author of Trade the Ratio. And we'll see if he still believes in trading the ratio, or whether the ratio is irrelevant now. More and more channels think the ratio is irrelevant. And, well, I don't know. That's like saying things are different this time. And if you look at this chart, you see going back to, the bad old days, we had the GSR at 113, and then spent quite a bit of time in between 65 and 80. Quite a bit of history here between a high of 91 and a low of 75. And just recently, okay, we've had a spike. This spike here up to about 100 is obviously an aberration. It is not the norm, as it was not the norm during the pandemic. So you tell me if the gold silver ratio is irrelevant or whether you see something in this chart that may be actionable. All right, let's keep moving. Now, the dollar usually moves in the same direction as the 10-year yield. The higher the yield, the more people want dollars. People have made a lot of money holding dollars and investing in 4 or 5% treasuries. So this is going the opposite direction of the 10-year, which tells you that the market is currently broken and big things are happening. Beyond that, I really can't say what will happen on Monday, but I do think intervention will happen if the wheels start to fall off the bus here, and they could very fast. All right, moving on to the Dow Jones. Well, the Dow Jones has had a good week, believe it or not. We had a low of 37,200 on the Dow. Now we're sitting at 40,200, but we appear to still be bouncing to lower highs, and fear of recession is now over 50%. So aside from the tariff story, which could be a puppet show, in my opinion, could be potentially being played like puppets here, and everybody is reacting one way or another, and this news could easily disintegrate into the past as we move forward. I can't say, I'm just speculating here, but the terror in the market from the tariffs could be substantially overblown as people and countries want to make deals. Tariffs hurt everybody, and it is a negotiating tactic, and I tend to think this story will dissipate over time. I could be wrong, I don't know. But nonetheless, the market has recouped to a lower high, and I think the trend on this market continues to be down. I think the trend on earnings continues to be down, and the valuations in the markets are still a little too high. But as price drops, and as we had a 20% drop in the markets recently, the PE basically goes down, and that makes it a better value. Will we have another 10%, another 20%, another 30% drop? I tend to think the markets will correct further here, but I could be wrong about that as well. Okay, on the tariff story, you know that, well, gosh, you've heard all about it. Reciprocal tariffs, higher tariffs, punitive tariffs. And we ended the week with tariffs being delayed by 90 days and could potentially be paused forever. That's what happens. They pause something and then they continue the pause. And the new normal is a 10% tariff across all countries, except for China. And the China negotiations have got to be robust and interesting. And I wish I was on the inside so I knew what was happening there. So if we shut down complete trade relations with China, obviously that'll have just major impacts in our economy and would seem to be inflationary. However, the CPI and the PPI printed below expectations, telling us that we have disinflation at the moment, looking in the rearview mirror. I tend to think recession will increase disinflation, and at some point, until the Fed does something, reduces rates substantially, which I think they will, and or they increase the money supply, or they give the Americans new checks, whatever might happen next. I think the direction on the economy and the markets is down, and inflation may be down as well. How else are you going to get to 0% interest? One of the big drivers of the deficit is the interest on the debt, and it's imperative that the government reduce the rates. All right, when something is imperative for the government to do to reduce the escalating deficits, it usually happens by hook or by crook. So, and the other day I said that revaluing gold would reduce the deficit. That was actually incorrect, and I misled you guys. I was talking about the national debt. Revaluation of gold will decrease the national debt by increasing our balance sheet by revaluing gold. It doesn't decrease the deficit. The deficit is more the income statement of the United States. And right now, expenses exceed revenues, okay? The only way to bring that down substantially is to continue to cut government. That'll help a little bit, not a whole lot. and to reduce the debt financing costs. And if you bring interest rates back down to 0 or 2%, that will substantially reduce the ongoing deficit, which will, make things look a little better. It'll still be horrible, and I don't know if they can get to a balanced budget. I certainly doubt it. But anyway, it is the balance sheet that would be restated if they revalue gold, and that is the national debt, what, 36 trillion, whatever that number is. Okay, moving on to the top stories. Now, if you think we're not trading with China anymore, you may want to evaluate where our silver comes from. What do we import, and who do we import it from? Well, let's see. We have got Mexico is the largest source of silver imported into the United States, followed by Canada, and then South Korea, surprisingly. Chile, and then Poland. There's a lot of silver in Poland, if you didn't know that. That's where the Germania Mint is located, and they have told me, hey, we got lots of silver out here. But the top two are Mexico and Canada. Okay, first, the tariffs on Mexico and Canada have been dramatically reduced or paused, and secondly, bullion has been excluded from tariffs. All right, that is a statement. I saw it right out of Trump's mouth. So I don't think that you can equate the moves in gold and silver to the tariff story. The tariff story is a sideshow, in my opinion, and until Mexico wises up and stops giving us all their silver, and Canada as well, I don't think these tariff stories, or even the China embargo is what I'm going to call it at the moment. I don't think that's going to affect the supply of silver into the United States. But it will tend to bifurcate the world between East and West, and what comes out of the East may stay in the East, the Far East, and what comes out of the West may stay in the West, and create two markets. And maybe that Shanghai Bullion Exchange will be a whole different market than the COMEX and the LBMA, London, of course, being part of the U.S. system. I don't know, but the world is changing, and people seem to be scrambling for metals. Let's keep going on, try to get a little deeper into this. Now, the Fort Knox audit, the latest story I could find on this is March 6th, where they talked about auditing the Fort Knox, and been a little bit of press on that. It's very interesting to me that it has not happened yet. If it has, and I'm not aware of it, let me know. But that audit seems to be dragging on. Now, why might that be? At the same time, lots and lots, tons of gold coming back to the U.S. from the LBMA. Somebody is bringing gold into the U.S. for a purpose. Now, my guess, and I'm just going to speculate here again, and it's worth what you're paying for it, is that the gold in Fort Knox has been pledged or leased, or somehow they've used it to create an income stream, and they got to pay it back before they can say the gold in Fort Knox is ours. I'm assuming it is there, but you could definitely trade away something that isn't there. I mean, you can sit in $1 million house and not own it, right? If you have a mortgage on it. That's what I think has happened to the Fort Knox gold, and I think what they're doing is repatriating gold to cover those contracts. That's creating maybe a bit of a short squeeze in the gold market. Will that be ongoing? Will it not be ongoing? That's hard to tell. I think it could be ongoing. I think it could be exponentially ongoing. Because this is a story about the revaluation of the gold in Fort Knox, currently valued at $42 on the government balance sheet, and revaluing that to $3,200 is starting to approach $1 trillion of debt relief on the U.S. government. And if gold went to $4,000, that would reduce the national debt even more. If we tied it to Kitco Spot, for example, or the futures market, which I think we will, and if it went to $5,000, that would reduce the debt even more, 10,000 even more. But the orders of magnitude are not sufficient to actually make a real dent in the national debt. But I do think it is to the U.S. advantage to revalue the gold, as they're probably going to revalue the holdings of federal land. All right, there's a value to that. Some could be sold off for development, but it could just be revalued, kind of an accounting trick. And I imagine you could probably generate trillions of dollars of what I will call debt relief through that accounting trick. It is an accounting trick, and it really probably doesn't mean anything. And as this article from the Daily Economy says, this is all good and makes a lot of sense. However, if they just use the opportunity to take that extra $1 trillion and print a bunch of money with it, then they've done nothing except squander Americans' legacy here. So that's all I'll say about that. But interesting, we haven't seen any new news about the Fort Knox audit. They're scrambling behind the scenes faster than a one-armed Enron auditor. Okay, there's something going on there. Moving on further at Coin Week, let's look at the stories of the week. Maryland lawmakers try to sneak a bullion tax into the budget. Well, those dirty, you know what I want to say. Maryland that must be a blue state, because you don't see this kind of nonsense in red states. Maybe I'm wrong, but anyway, boy, more taxes on bullion. Well, I know they need money, so they're going to go after the metals here. But the trend is more to untax silver and gold bullion than it is to tax it. Okay, American Eagle gold proof coins are on sale, and they are way overpriced. So if you're buying those, I suggest you buy those in the secondary market in a year or two. They'll be way cheaper. All right, and in the meantime, buy a Krugerrand or something to keep your powder dry. You know, if gold goes to 4,000, you don't want to sit out the gold market here. All right, Australia has released their koalas. It's kind of a dying series, but okay, cute enough. This is interesting. A U.S. Mint announces release of the final coin in the Platinum Proof series. Okay, they discontinued the brilliant uncirculated platinum coins in 2023, making those a collector item. All right, and they have done well in the aftermarkets. They garner at least a $100 premium over your average Canadian platinum coin. But now they're discontinuing the proof platinum coins. Now, you know, you can buy these in the secondary markets sometimes cheaper than you can get the BU coins, because they've discontinued the BU coins. All right, so I'm bringing this to your attention, you heavy hitters with big wallets and the ability to sell retail. The platinum proof may be the latest dodo bird, and you may want to get some of those at below release prices, not from the U.S. Mint. Just saying there. Okay, and ABC Mint, that's an Australian mint. They have a new coin out here. Oopsie, ho-hum. All right, RCM Mint issues largest silver maple leaf coin. 10 kilo, there you go. Pick up one of those. And, there's other stuff here. The Palladium Eagle Proof coin is on sale, also overpriced. I doubt they'll make that for much longer. U.S. Mint is unraveling as we speak. Their production of bullion is really greatly diminished. As you've heard, gold buffaloes have gone out of stock. And I think silver eagles will be the next to go out of stock. They are laying off huge percentages of their workforce. They may even close the San Francisco Mint. I kind of doubt it, but and they've lost their mint director. Not that she was a good mint director, but a lot of turmoil at the U.S. Mint, and I'm not aware of any plans to correct that problem anytime soon. And the problem is with the American Eagle, the BU Eagle, is when they go into allocation mode at the U.S. Mint, just as silver is taking new runs at $35 almost every month, That's going to create a demand. When things are not supplied, the demand tends to grow, the prices and the premiums tend to grow, and that creates the first building block in a FOMO scenario. So, if we see silver punch up to 35 and maybe takes a couple more cracks at it, ultimately breaks through because that GSR is too high, and we'll get Carl's opinion on that. And then the US Mint is not making as many because retail demand has been weak. Let's face it, silver is a industrial commodity just like copper, but it is also a monetary metal with a long history, and people, like elephants, have a long memory of the value of silver. And I don't think for a minute it's going to be relegated to a non-monetary metal. I don't think we'll ever go back to a silver standard. I don't think we'll ever go back to a gold standard either. And I don't think that gold in Fort Knox will be revalued to $200,000 a coin. I mean, an ounce. I just don't think that's going to happen. That's just me. But we could create FOMO in this market if silver continues to run and U.S. Mint really reduces production. The Eagles go up, the premiums go up, and then the maples go up, and then the junk goes up, and then the rounds go up, and even the 100-ounce bars go up. You've seen it happen before, and you want to be buying before those kind of stories hit. When those stories hit and when they get mature and we hit a peak and you can sell your Silver Eagles for $50 a piece like you could a couple years ago, you sell them. Okay, that's my opinion. You may not believe in selling silver or gold, but that's what I'm talking about. Okay, and if you're here for the first time, this is my website, which I won't go through today, but I did yesterday, bestsilvergolddeals.com. We're not sponsored by any bullion dealers, and you can figure out where the cheapest prices are. Right now, and here, the gold is first, and the silver comes second. Right now, if you're looking for a Silver Eagle, well, anyway, I won't dink around there. Let's talk about a couple of things. Costco. Okay, Costco has been outsea and little dribs and drabs popping in. They had some gold yesterday at, I think it was 3,300, if my memory serves. They have these silver bars, which are also out of stock at $36 an ounce. So I think that's a little overpriced. Nothing wrong with the bar. It's a beautiful bar, and you can buy that. And if you have a 4% off, you can get that for under 35 an ounce. Okay, but there's plenty of deals out there for rounds at cheaper prices. So I'm not buying the silver, and the gold was a pretty good deal if you don't mind buying gold at these elevated prices. Costco is winding down here. They've put a two quantity limit on their gold. Now you can still buy it on another day. You can repeat buy, but they're reducing their offerings of gold and silver. Haven't seen Silver Eagles in a very, very long time. And the Gold Buffalo, which was the home run for the longest time, you could have got so cheap, and I did, and a lot of people did with that 4% off. Anyway, I think the Costco story is rolling to a close here. They got a lot of people to sign up for their executive club membership. They spiked their revenue, but their profit margins are getting hit here. And did they take a hit on the run, on the recent decrease in gold and silver? You know, that nanosecond when gold was in the 29s and silver was in the 29s. I don't know. I don't know how they hedge their book. But Costco seems to be diminishing here. I don't know that it'll come back. All right, and moving on to Silver Eagles, which is what I wanted to get to. Before I do that, I want to check the spot price. Okay, I'm over on Pinehurst, and they've got the best deal, aside from eBay, where the deals can be better, and I show you that in my videos. They've got a silver ask price of $32.51. Now, we went over here, and we saw spot price on silver is $32.24. So what they say the market price on silver is $32.50. However, the futures market is $32.19, even less than the spot market. So when bullion dealers tell you, and I'm not just picking on Pinehurst here, there are others that are far worse, but when dealers tell you we set our prices right now $32.51 based on the futures market, and the spot market and other factors, air quotes, what they're saying is, screw you. We're going to put a hedge in here and we're just going to say spot is higher than the futures market says it is, than the spot market says it is. And that is what they do. And some do it even more than Pinehurst. Some don't do it at all. But what they're doing here is they are just throwing a little, a little extra in the pot for themselves. Anyway, they're saying spot is 32.50. It's actually 32.30, and you can get 20 Eagles for 35.90. So 32.30, 33, 34, 35, 30. This is $3.60 over spot, which is a very good premium on silver eagles historically. Now I've showed you deals over and over again where we can get them for $2 over, $2.50 over. The dealers on YouTube I recommend used to be $2 over, $2.50 over. No, they aren't any longer. They're raising their prices because the eagles are not coming into the shop. In fact, and check this with your own LCS, on the latest dip, people were buying. Okay, and not just gold. If you're overlooking silver here, you're saying, I'm going to go with the winner at the high, and I'm going to ignore what hasn't moved as much. I won't call silver a loser because I bought it at 14, I bought it at 20, and then it went back to 18. I bought it at 22, I bought it at 25, I bought it at 30. Okay, silver at 32.50 is not a loser by a long shot. And these stories of the demise of silver as a stackable metal are absolutely ridiculous in my opinion. So why did I go down that path? 350 or so premium on silver, or 250 if we get a better deal on eBay or Costco or somewhere, or Walmart. Remarkably low premiums, and I think silver eagles, if you can find them, and even cull or circulated silver eagles, off quality silver eagles, are a great move right now. The next best thing would be junk, in my opinion, which you can get for 50 cents to $1 over spot right now. And when eagles run, you can better believe junk runs as well. I wonder if they're melting junk. I don't know. I don't think they are. And that's why the dealers kind of, they keep the premiums lower because they can't send it to the refinery. Or if they do, they don't get as much for it. So anyway, that is, I think, all the stories I wanted to go to. What are you doing today? Maybe nothing. I know there's fear that anything can happen Sunday night when the futures market opens. I would just say keep some cash available, but I would not hesitate to pick up silver here. Gold is, it's kind of like buying a Momo stock, right? You know those, Nvidia, etc. It's making its run. It's a big run. That could be the U.S. Accumulating. That could be foreign countries accumulating while they sell bonds. It could be retail investors waking up to the value of gold in the portfolio. I used to have a lot of involvement in a company pension plan, and we talked all the time about the balanced portfolio, the 60-40 portfolio, or the 70-30, or the 80-20, or, anyway, the balanced portfolio. And I said back then, I don't think long-term treasuries provide the protection they used to. And, I said gold is really the balanced portfolio. Have your stocks, especially if you're young. I think they're going to be cheaper. I think they're going to be on sale here pretty soon. But also have something that counterbalances that. And, bonds are not what they used to be. Now, I do think they're headed back down here for a little bit, but then I think they're going to spike higher as, we re-stimulate the economy, etc. But that's the long term. In the short term, anyway, bonds will probably protect you, and I could be wrong about that. But gold is the ultimate protection against a stock portfolio, not bonds anymore. And you can see that if you had been 60-40 stocks to gold, you'd actually be up right now instead of down 10, 20, 30%. So put that in mind. Now, the problem with company 401ks is they don't typically offer a GLD option or a physical gold ETF. They typically offer a gold basket, which is comprised of what? Gold miners. Yeah, that's what my company did. And that's how I lost a bunch of money, because I was in the gold miners ETF. And that was one of those times when gold miners took a hit and I lost money. Now, if we go to gold miners right now, I said I was going to wrap up, but I did want to show you the GDX. And this is the VanEck Gold Miners Index. And let's make this bigger. And oh God, when did this happen to me? I don't exactly recall, but I probably bought in high, and then I puked it up when it was, down 20, 30%. Lost a lot of money doing that. Now here we are, we have a substantial breakout in the GDX. Again, it's a momentum play, and if you look at the max time period, we have been as high as 62. We're currently at 50. But we're getting pretty frothy here on the GDX. I'll go back to a 5-year. And I worry, because gold miners are stocks. And if we ever get that really big waterfall event in the stock market, it's going to take these down. And I had been advising to avoid them. Now, I keep very small positions in many, many gold miners because I like to watch it, and I just sell when it's up and I buy when it's down, and I don't keep a lot of money in there. But, well, I guess either you're going to make a lot of money in the gold miners here, or you're going to lose a lot of money. So, and silver miners even more volatile. Silver miners do not have the same chart as gold miners. If you wanted to take a look at that, I'm not SLV, I'm sorry, SIL. SIL. It's just so dangerous. SIL Global, Global Silver Mines, SIL. Okay, and let's get a 5-year chart on that and make that bigger. Okay, so the silver miners have not broken out, but silver is preparing for a breakout here. I just think that's going to flow. I mean, there is a supply deficit of silver. If we bifurcate the world into East and West, it'll be even harder to get silver. And the only thing that's going to stop, demand is going to be a really serious recession, which would slow down investments in solar panels and technology and supercomputers. But I'm going to say that the recession that we're about to head into will be shallower than people think, and I don't think we'll head into depression. And I think the tariff story will fall into the background. It'll create a buying opportunity in anything you want to buy here in the very near future. But notice silver miners have not really broken out yet, so they're lagging behind gold miners. Make that a little smaller for you guys. But also very dangerous because, well, you see, they could go from 47 to 21. Okay, how'd you like to lose half your money? So I think that is also a speculation. And I do enjoy following them. And when they're up, I sell them. And when they're down, I buy a little more. And that's all I do. But people are starting to get into at least the gold miners. And it could be a momentum play. But I think this is just, it's just a little too risky for your average stacker. Stay in bullion, stay in low premium, venture into some silver eagles if you want to pay a buck more, a couple bucks more. Follow my advice there. Or get junk if you're really going on the cheap. But yeah, we'll have to see what happens here. Okay, I went down a rabbit hole. I didn't mean to go down, but that is the bullion news of the week. And I got to get off here because pretty soon I'm getting on the phone with Carl Yushenka. I will see you guys tomorrow. Louis out. Oh, hey, and thumbs up if you don't mind, if you like what I'm doing here. Thank you so much.